Adobe Stock. ADBE is the ticker symbol. Adobe Stock has been selling off since its peak back in February. They released their latest financial earnings, but then forward guidance was a bit queasy. Since then, Adobe Stock has been selling off. It's down 25% from its peak to where it is just today. What's going on? What could potentially happen in the future? My take, real simple. Lots more selling probably going to happen. We're probably going to see prices between 250 to 300, maybe staying in that range, maybe hitting as high as 350. But I wouldn't look at Adobe Stock to buy Adobe Stock unless it was right around 250 to 300. When you break down what's happening with the economy, when you break down and take a look at future earnings, future revenue, and guidance, Adobe Stock is overpriced at these levels, and investors are going to sell out, and we're probably going to hit those targets. But at that point, Adobe becomes a value investment. You'd earn a fairly decent yield and could do so over many years. The AI story, every company out there is going to put out some kind of AI story. And as it is with Adobe, of course, they're releasing new information on what they're going to be doing in the future with video content and things like this. These companies are going to catch up. In the meantime, we still have the U.S. economy as a variable first. Inflation is too high. Interest rates are going to move up. Equities are beginning the process of selling off. The Federal Reserve is likely to raise interest rates. All equities are probably selling off because of that. And then it's time to evaluate Adobe Stock. Let's jump in and I'll show you the charts I'm looking at for Adobe Stock. Here we're looking at a price chart on Adobe Stock going back a little over a year actually. I like Adobe Stock a lot. It is one of the premier companies. Not many companies out there do exactly what they do, and they are the best out there, especially when you consider their entire suite of products. Sure, there's some competition, Canva, which I use Canva, and honestly, I think it's terrible. But that's personal opinion. Dollar votes by the masses show that Adobe Stock is one of the best companies out there. It's just overpriced. I like Adobe. I like Adobe Stock. I don't like the price of Adobe Stock. And neither does the market. As you can see, we've been selling off. We peaked, I think it was in February. Then the latest earnings release, things have gone straight downhill since then. Here's a bigger look going back several years. And as you can see, we're now where we were just 3 years ago and likely to go much lower. And I'm looking at 250 as probably a good idea to buy at that point. Nothing before then. That's about a 50% chop. That's huge. This is the March 15th. This is immediately after the latest financial earnings for Adobe Stock. And as you can see, Adobe Stock, their shares plunged on that day. That was, I think they released them on March 14th, and then March 15th, of course, we saw some selling off across the board. And as I mentioned, I don't really look at the actual product. I sit there and say, listen, if you're not getting in on AI, you're dead in the water. Of course, innovation at Adobe they're going to do what they are going to do to bring in the customer base. They have no choice. And it's probably going to be an excellent quality. Anybody who is a content creator on any kind of scale understands what Adobe does. Let's take a look at, here's revenue, the latest revenue. And this is something that's important to me whenever I'm looking for value investments. And Adobe Stock, of course, is consistent here. Quarter after quarter after quarter, you see increasing revenue gains. All else equals, if the U.S. economy does not push into a recession, if the Federal Reserve can manage some kind of soft landing with a sort of pseudo pause with employment, because employment numbers are far too high at 3.7%. We have inflation numbers that are starting to push back upward. We have too many people on the payrolls, bottom line. And it's a solid position, except the Federal Reserve has to fight inflation. They will sacrifice jobs in order to cut inflation. The ticket for that? Interest rates. Interest rates need to go higher. The 10-year Treasury, of course, is moving higher, and this is pressuring stocks lower. So Adobe doesn't have a monopoly on the stock moving lower. It's just doing so a little faster. Projected revenue, this is something I kind of keep an eye on. Over the next 2 years, we've seen projections for 2024 for Adobe Stock. Revenue projections are slightly lower, and I've seen some numbers that are even less than this. But when we look at the quarterly numbers, we can reasonably assume that given an economy that is expanding, Adobe Stock would do well simply because they can continually increase their revenue. We may see a bit of a contraction in the economy. That would be a buying opportunity for a long-term value investor. 2025, of course, 24.1 was about the consensus for the analysts. We'll see how that plays out. Net margins, we saw a one-off on the net margins for extraordinary extra costs. Normally, Adobe is a bit of a cash cow when it comes to net margins. This is more than 2 times the S&P 500. The S&P 500 prints about, say, 10% net margins, anywhere from 7.5% to about 12.5%. It will vary throughout the year, but clearly net margins on Adobe is 2 times that. Earnings projections, this is where I spend a lot of my time. I ask the question, what will the company earn in the next 4 quarters, given all else equals? Now, we may see some kind of contraction. And I've lowered the consensus all the way down to $15 when I kind of eyeballed this. That's about a 30% chop from earnings per share. So should we see some kind of contraction, that's a pretty big dip. When you look at price to earnings, Adobe's expensive. On the one hand, look at their net margins, 29%, normally about 27.5%. On the other hand, price to earnings. But investors aren't going to be chasing yield so much anymore simply because look at the 10-year Treasury yield, trading at 4.65% and moving higher. We could be at 4.75% by the end of, say, this week or next. Easily next week with all the economic data we got coming in. At 4.75%, when you start considering the $15 to $18 range of earnings per share for the next year on Adobe stock, the yield given today's price, it's just not there. As a value investor, there are alternatives that are far more secure. The U.S. 10-year Treasury, what's your worst case scenario? The Fed pushes interest rates maybe a quarter or a half a point between, say, the last tail end of this year. Eventually, they lower interest rates. As they lower interest rates, prices inversely move higher. So anybody who does park their money on the 10-year Treasury would be seeing price gains. Versus when you look at the yield you could get if you bought Adobe stock today versus the benchmark 10-year Treasury, it's under the yield you would get out of the 10-year Treasury by a bit. Number one. Number two, what's your risk variables? Adobe stock could easily fall significantly. Here's a breakdown of what we're looking at. 475 is the price. 1803, given the 1803 at today's price, you're looking at 3.8% yield versus the 4.65% yield you get out of the 10-year Treasury. As a value, if you didn't look at Adobe at all and you just said, which one would you rather, from a yield perspective, which one would you rather invest in? Now, obviously, Adobe stock, you wouldn't get all $18. You do get some dividends whenever you invest in stocks, but what you also get is the potential for the management to start buying shares back with any reserve money that they have. So no, you don't get 100% of that 18, but you do get the effects of that 18. Plus, management could pay down some debt. Management could invest in other projects that would provide more shareholder value. And that's what you're getting when you're looking at that earnings per share projection and asking the question, what's the yield given the next 4 quarters? Given that, taking a look at the 4.65%, Adobe, that's a sell. Adobe stock is overpriced at these ranges. Start looking at Adobe stock and asking the question, would you buy a dip if it went all the way down, back down to 250, which we were just there at 250 about a year ago with Adobe stock. So that's not a far fetch. And given what's happening with the economy, that's probably a high probability, especially since investors are sort of cashing out on the concept of Adobe stock because the yield isn't there, neither is the growth rate. But that's pretty much going to be the story of the entire economy here in just a few months. Make sure to hit the like and follow button. If you're looking for this kind of content, the written content, I've got my link to my Substack down below. I am walking away from my website and everything is going back to Substack, and I'm going to build up that instead of the website. It's just such an easier medium. And there is a written content on Substack on Adobe stock and all my value investments. I'm going to start putting those up onto the channel. Make sure to hit the like and follow button. Get the link to the Substack. We'll see you in the next video.